Most traders think scalping the 5-minute chart means random entries and fast losses. That's why they fail. Today I'm going to show you how to use the weekly candle to turn 5-minute scalping into a high probability, repeatable entry model. Here's the problem with most 5-minute strategies. They have no higher time frame context. The entry is taken in both directions. You're scalping noise and not structure. The 5-minute chart isn't the issue. Trading it without bias is. When you give the 5-minute chart a job, execution only, everything changes. The weekly candle does one thing for us. It tells us which side of the market we should be scalping. Here's the rule. Weekly high equals premium levels. Weekly low equals discount levels. You never scalp inside uncertainty. You only scalp after liquidity is taken. Step number 1, weekly high or low is swept. First, price must sweep either the weekly high or the weekly low. No sweep equals no trade. This tells us liquidity has been taken and direction can now be released. Step number 2, price fails and returns inside the weekly range. Next, we wait for price to fail. That means the sweep happens, price cannot continue, price returns back inside the weekly range. This is where most traders get trapped. We wait. Step number 3, execute on the 5-minute chart. Now the 5-minute chart finally gets involved. After the sweep, we wait for the CISD to break, and that becomes our entry. Stop losses behind or above the sweep. We target a clean 1-to-1, or we target the next closest liquidity level. The weekly candle gives direction. The 5-minute chart gives entry precision. Let me show you 2 examples on the charts. Here we are on the charts, and as you can see over here, I've got the weekly candle and then I've got the 5-minute candle. So I can see both the weekly and the 5-minute at the same time. I'm using the SMC indicator to do this, but you do not need this indicator to be able to do this. You can do it manually or without it. If you look at the charts over here, this is the weekly high. You can see the high of this candle is the weekly high. So what we're doing now is we're waiting for price to get to that level because we know that is a liquidity level. So let's wait for price to get to that level. And there you go. Price has broken that level. So now we want to wait for the failure to displace or the sweep to happen back into the range. So you can see we wait, we click, and there you go. You can see it's very clearly swept the highs and come back into the range. And this is where the indicator will create the CISD level. The CISD is the candle or series of candles that creates the sweep. So now all we need to do is we need to wait for price to break the CISD level. If it breaks that level and closes, that confirms for us that the sweep is in fact real. So let us wait for price to break the level. You can see here. There you go. So you can see price has broken and closed through the CISD, and this is where we take our entry. So the candle that breaks and closes, that's the candle we want to focus our entries. Stop losses can go above the swing highs, and target, we're going to target the next liquidity regions. So this is a liquidity region over here. That could be a potential target. This could be a potential target over here, or these over here can be potential target. So we're just targeting previous swing low points, and we can target all the way down to here. You could just simply do a 1-to-1 if you wanted, or you could target, in this situation, we've got a 1-to-3.4. So let's play this out. Ooh, took out those targets. So you can see it's taken out target 1, it's taken out target 2, and will it take out target 3? And it doesn't look like it's taken out target 3. Anyway, so let's wait for price to get back to the range again. So we can see, oh, there you go, it took out target 3. So that's perfect. So all 3 targets were taken. So now we're simply waiting for price to get back to the weekly high. You can see over here, now we've got the indicator has produced the sweep location and it's showing us this failure to displace. So let us wait for price to get back to that high. And there you go. Price has taken out the highs. It's swept the high and it's come back into the range. And that's why you can see the CISD has been created again. So now we're just simply waiting for price to break the CISD before we look for an entry. So another CISD has been created. So every time price sweeps the high of the range, another CISD is created. So we get a second CISD. So now all we want to do is wait for either this CISD to get broken or this CISD to get broken. Either one can become an entry. There we go. So we get a break and close of the CISD. So now we want to look for an entry. We want to enter on the first candle break and close. Stop loss can become above the swing high points. And then we're going to target the most relevant liquidity areas. We've got two liquidity areas we can target. We can target this as a liquidity area, and we can target these lows down here as a liquidity area. This would be your safest, and this would be, so you could wait to target this liquidity. When price hits this, you can move stop losses to break even, and then you can have a risk-free trade. But let us start over here. So let us play this out. You can see, there we go. Let's extend this. Extend this. There you go. So price has taken out the first level. So now all you can simply do is you can bring your stop loss to break even. So now it's a risk-free trade while we target the lows. Or you could fully exit the trade, and that still would have been a very successful 1 to 2.75 ratio. So let's continue. Oh, there we go. Price took out the lows of this as well. So this was a very successful trade as well. A 1 to 4, super successful. So there you guys can see. Let me quickly recap the strategy. We're waiting for price to get to the weekly high. You can see over here we've got the weekly candles, and they're showing you the previous weekly high. As price reaches that high point, we want to wait for a sweep and a failure to displace back into the range. At that point, we mark out the CISD levels, and we're simply waiting for a candle break and closure through the CISD levels, which become your entry points. Stop loss goes above the swing highs, and we target the most relevant liquidity levels. This is exactly why I built the SMCX indicator. Weekly highs and lows marked automatically, real-time sweep detection, CISD confirmations highlighted. It removes the guessing and keeps you from entering too early. If you want to trade this exact model with clarity, I'll leave the link below. Now, if you want to master the weekly candle strategy in more details, click to watch this playlist now where I break down the full strategy for you. Click now to watch it.